I remember Jim Rickards on YouTube. I remember saying this very clearly, that he considered J.P. Morgan to be the biggest criminal organization the world has ever known. So this would be the kind of thing that they would do, is to hang everybody else to dry. So now the other 8 traders are shorts and are the ones on the hook.
The price of physical precious metals is driven in no small part by the activities of the future exchanges. But the future exchanges are heavily influenced by a small handful of commercial traders with large short positions. To better understand who these players are, their motivations, and the reason their influence could come crashing down soon, I'm joined by my guest this week on GoldCore TV, Ed Steer, author of the hugely respected subscription newsletter, Ed Steer's Gold and Silver Digest. And remember, as always, if you want to see more interviews with thought leaders and industry experts in financial markets, subscribe to GoldCore TV and hit the notification bell now. And if you want to learn more about how to buy, sell, and store physical gold and silver, log on to goldcore.com, your precious metals experts. Ed Steer, welcome to GoldCore TV.
Well, Dave, it's a real pleasure being on your program. Thanks for having me.
Thank you. Now, with everything that's going on, and when I mean everything that's going on, I'm talking about excessive money printing that has been going on over the last number of years. Ever since 2008, effectively, it has increased with the global financial crisis, accelerating even further now over the last number of years. We've just seen incredible amounts of money printing. You would expect the gold and silver should be significantly higher than where they are now. Why aren't they?
Well, the simple reason is that 8 commercial traders trading in the COMEX futures market are short absolutely prodigious amounts of this metal. And this is something that silver analyst Ted Butler has been harping on for the last 10 or 15 years now. These commercial traders, and the big 4 traders, are mostly banks or investment houses. Actually, the largest 8 traders are mostly banks and investment houses. And the other commercial traders, the smaller ones, and there's probably 40 or 50 or 100 of them, they're all long these markets. But it's these 4 traders, most of which are banks, have been short these metals, and until they decide that they're going to let the prices go, this is the sole reason why precious metal prices aren't sky high today.
You have a good demonstration of this in this chart that we have up on screen at the moment. Maybe you might actually just talk us through what this chart represents.
Sure. It's not very complicated. These are all the physically traded commodities in the COMEX futures market in the U.S. And from the very left-hand side of the chart, you got rough rice, which is basically nothing at all, to the extreme on the right-hand side of the column, which is silver. And the red bar represents the short position of the 4 largest traders in the COMEX futures market. And the green bar is the 8 largest traders. So you got 4 traders that are short. On the right-hand side, you can see it says days of production. These 4 traders, which are all banks, are short 100 days of world silver production. And the other next 5 through 8 banks are short the difference between 100 and the top of the green bar, which is 36 days. But if you look at silver, platinum, and gold, which are nailed to the right-hand side of the chart and have been nailed to the right side of the chart for the last 30 or 40 or 50 years, you can see that basically these 4 banks control the price of the precious metals. And
so this hasn't really changed in terms of over the last number of years, as you suggest. It is gold, silver, platinum that have had the largest short position in terms of days of production.
Absolutely. And this has been going on for decades. And I'm not talking about like 1 or 2 decades. I'm talking about 3 or 4 or 5 decades. Basically, ever since the COMEX futures market came along and these precious metals, the purpose of the futures market is for the banks of the world to control commodity prices in general and precious metal prices in particular. And as you can see, gold, platinum, and silver are nailed to the right-hand side of that chart and have been there for decades. Now, palladium is a separate issue. You see it further on the left there. It's such a dinky market. It used to be number one for about 3 weeks back in 2000. I can't remember what the year was when palladium had a big run up to $2,000 or $3,000 an ounce. But since then, it's fallen into, as you can see, it's non-existent. So it's not a factor anymore. But it's always been, Ted Butler has said that it's always been silver, and that's their biggest problem child right now. And as you can see from the chart, it's been nailed out to that side of the chart for the last 40 years.
And the four largest traders, who are we talking about here?
Well, three of the four, let's see. The biggest one would probably be, it's hard to say which is the biggest, but there's Citigroup, HSBC, which is British Bank, of course, and Bank America, and one other bank. But the three biggest are those three, and the other 8 large traders, those red bars and green bars on the right, or on the chart, in the precious metals. The banks are only short in the precious metals. They're smaller banks like Dutch Bank, ABN AMRO, PNB Paribas, Bear Stearns, Australia's Macquarie Futures. They're all in there controlling the price, but it's all the banks. But the three bigger: Citigroup, HSBC, and Bank America.
And what percentage of the short side of the market are we talking about here, made up of these 8 banks? Okay,
I compute this in my column every Saturday, and the 8 largest banks are short more than 50%.
Wow.
Of the entire COMEX futures market in both silver and gold. Okay, so it doesn't matter what the other 49% or 43% or 47% of the traders do, and there are thousands of them. Okay, the big 8 traders control the short side over 50% of the market, so they control the market, and it's been that way for generations. So that's how blatant it is.
So they've got massive short positions, obviously, and with greater than 50%, they have a massive asymmetrical influence on the silver market.
They control it. It's as simple as that, and in gold too, and in platinum.
The big question then is why?
I want to go back in platinum. Platinum, it's almost 60% because their short position there is even more obscene of the total open interest. It's just incredible, Dave.
Wow. So that begs the question. We know who, but why? Is this purely just to manipulate the silver market, or what's the underlying motivation?
Well, let's go back to the first question you asked when we started the show. Said, why aren't silver prices higher? What they're trying to do is prevent people from seeing the massive currency debasement and monetary inflation that's going on by suppressing the canaries in the coal mine that would otherwise speak out and tell the truth about all the fiat currencies in the world. And it's only through the intervention of the investment banks and the banking system in general, in not just the precious metals, but all commodities in general, to prevent people from seeing just how outlandish the currency debasement and this money printing has become. And this has been going on since Nixon yanked us off the gold standard back in 1971, or the gold exchange standard. And the COMEX futures market in gold started in 1973. And instead of selling gold in the London gold pool and trying to control the price that way, they've been doing it in the COMEX futures market for the last 50 years. And how they're doing it is plain to see on this chart we're looking at right now.
So within that, then you're suggesting that there's, I'm not going to say an element, there's collusion, obviously, between central banks and our governments and these various banks in order to manage the precious metals price so as not to allow the canary in the coal mine to effectively fall off its perch and show what's really going on.
Yeah, and the collusion is exactly the right word. It's between the banking system and the treasury departments of the largest governments in the world, and the governments themselves. They're trying to keep this Ponzi scheme alive for as long as they possibly can. And as everybody and as Doc knows out there, no paper system has ever survived through the test of time. This one won't either. And all they're trying to do is prevent people from seeing that the inevitable end is coming at some point, and at that point, what they may call the Great Reset, we'll see precious metals reset in price as well.
Now, we haven't, as we started off by saying, we haven't seen gold and silver move. We've seen gold move to a new high. It's since obviously come back down below 1,800. Silver briefly over 30 bucks earlier this year. It's been up into the late 40s a good number of years ago, but still hasn't made a new all-time high. So far they've been successful in achieving what it is that they want to achieve. How long more can that go on? Because it's no longer it's no longer a secret that precious metals are the canary in the coal mine that point towards debasement of currency. But can this continue for much longer?
Well, you would think it wouldn't. If you go back to March and April of last year, you remember we had that huge down spike in the precious metal. I think gold got hit for $300 or $400, and silver's driven back to $9 or $10 or $12 an ounce. The short position, J.P. Morgan was always the big short in the COMEX futures market ever since they took over Bear Stearns. It's something that Ted Butler discovered way back then, and he's been on about this ever since. That big spike down we saw back in March was J.P. Morgan gaming the market and getting out of its short positions. It was the largest of the big 8 banks, or the big 4 banks that was involved in the COMEX futures market. Now they're no longer involved at all. And it's the other banks. And they've been struggling ever since. It's been over a year and a half now, ever since, to keep the lid on the price. And they've been very successful. I'm not arguing with you, and I agree with you 100% that they've been very successful up until this point. But it's become obvious, especially with the ascendancy of this Reddit Wall Street silver crowd that showed up in January. Nobody saw these guys coming. And I give them full marks for going out there and just absolutely raiding the precious metals physical market, and it's caused all kinds of problems. And I'm sure you've seen it with your company as well, and with all silver retailers and wholesalers, that all of a sudden the physical inventory just vanished. So now, they're trying to get out of the short positions. You take a look at the silver and gold prices we've seen over the last, since February, whenever these guys showed up. They've been hammering away at the prices. I mean, look at the 4 precious metals. I mean, we're looking at $22 silver and $1,700 gold. This is the 4 largest traders engineering the price lower in hopes to cover as many short positions as they can. But this price management scheme has been going on for 50 years now, and it's very long in the tooth. And we're all weary of it, but there's no question about it. At some point, it is going to end.
So you believe then that the rest of the large traders have a similar appetite to J.P. Morgan to actually get out of these short positions?
They certainly do, and J.P. Morgan hung them out to dry. I remember Jim Rickards on YouTube. I remember saying this very clearly, that he considered J.P. Morgan to be the biggest criminal organization the world has ever known. So this would be the kind of thing that they would do, is to hang everybody else to dry. So now the other 8 traders are shorts and are the ones on the hook, and they realize their peril. And I would think at some point, because they're in the hole, Ted says they're in the hole about $9 billion right now, which is the first losses they've ever sustained. And it's my opinion that when the push becomes shove, that the central banks of the world and the Exchange Stabilization Fund in the U.S. will be forced to come along and bail these banks out because they're systemically important and they're too big to fail. So yes, we'll see higher prices, and probably a lot of the important banks that are short the precious metals will get bailed out one way or another.
Now, we've seen a situation develop over the last number of years. We've got stock markets at all-time highs, driven primarily again by money printing. Rationally, there isn't really any kind of fundamental reasons for stocks to be at the levels that they're at, other than effectively money printing and chasing yields and speculation. With that excessive frothiness in the stock market, it is vulnerable to a correction, and we haven't seen a decent correction now for some time, except for the COVID correction last year, which was very, very, very short-lived. Do you think that there is going to be some correlated move in precious metals lower if we see a sell-off in stocks and an opportunity for these banks to cover some of their shorts?
You can put, as Ted said you can put nothing past the treachery of these bastards knows no bounds, as he said. And it wouldn't surprise me at all if we saw a stock market decline where we got the precious metals smashed one more time, just for the big four to get out of their short positions as much as possible. But that can only go on for so long, because the traders on the other side, the non-commercials and the small traders, they're only prepared to sell so many longs and go short so much. And once they've sold as much as they're going to do, they can bash away all they want, but and it's not going to make any difference to the price. But there's no question about it. Any stock downturn, you would think that they would use that opportunity, but it also depends on what's happening in the currency market too. I mean, if we see the dollar take a big hit, then I don't care what the powers that be do or what the stock market is doing. You're going to see precious metals scream higher on that news. But a stock market decline could see precious metals get hit for a brief period.
With this excessive short position in the market by these 4 or 8 traders, depending which way you count it, if those short positions are to be unwound, that's potentially paving the way for an extraordinary move higher in precious metals.
It would be the moonshot of the century. I know that, as you know, Ted was a commodities trader for 25 years on Wall Street, so this is an area that he's an expert in. And there's only 2 ways to cover a short position, okay? You can either deliver physical metal into it, which doesn't exist in silver because the market is so tight, or you can buy a long position and cover your short that way. But either one is going to drive the price to the moon and the stars. And of course, it's not going to be silver, it's going to be everything else. There's enough gold in the world that can be purchased by the short traders to deliver into their short positions. But that option is not available to them in silver, nor is it available to them in platinum. So unless they close the COMEX, there's only 2 ways out of this for the shorts: deliver or buy along and cover. Either one will drive the price to, like I said, to the moon and the stars.
And back to, as you mentioned earlier, Wall Street Silver and the work that they've been doing with respect to raising the profile of silver, and particularly physical silver. Initially slow, but gathering momentum all the time. And now they have a significant amount of followers at this stage. That is a little bit of a stick in the spokes for the short traders, aren't they? Because effectively we're starting to see a much greater appetite for physical silver, which is closing off one of the options for the short traders to deliver.
Yes, like I said, they came out of nowhere, and nobody, even the big shorts or the big shorts out there, said, "What the heck was this all about?" And this forced them to come into the market and short the hell out of the market. As you know, the price took off briefly over $30, but the 4 largest traders came in and capped the price and drove it lower. So they're certainly on notice, and there's no question about it. The Reddit Wall Street Silver crowd has made an absolutely enormous difference in the physical market. And they've got it 100% correct. Physical in hand, buy it, hold it, get your hands on it. I know that the retail silver outlets are having all kinds of trouble getting hold of silver. And it's a little better now than it used to be, but it would only take silver to rise in $1 or $2 or $3 more, and the retail investor would be back in there in spades. And I can tell you right now, the silver shorts live in absolute fear of letting silver prices rally, because they know exactly what's going to happen. It's not just in the physical retail and hand bullion buyers from the Wall Street Silver crowd. It's SLV and all the other Sprott and all the legion of other mutual funds and ETFs out there that will see inflows into them, and the physical silver to supply that is not there at all. And it wouldn't take much of a rally to put us back in a shortage position once again. And from there, it's onwards and ever upwards, unless the big 4 are prepared to go short, mega short once again. And we'll have to see what that happens when the next rally is allowed to begin.
And obviously, as you were suggesting earlier, there's significant losses there at the moment that they're working hard to cap by keeping the prices low. If the price is to rally significantly, those losses will grow exponentially as well.
Exponentially. Somebody asked me that question, how big could they get? Well, let's say silver gets back to $50 even. Well, we're looking at losses, in excess of 20 or 30 billion dollars, and spread it over 4 banks or 5 banks or whatever. That's huge. And of course, in a short covering rally, the price is going to go absolutely monumentally higher in the hundreds of dollars. And of course, this will bankrupt them all. And this is, of course, what in the end that they're scared of. But the problem's not just in silver; it's in platinum and gold too. So, this price management scheme's been going on for 50 years. It looks like it's drawing to a close. The physical market is eating them alive. There's no way out of this without driving the prices to the moon and bankrupting all these banks in the process. So, you take a look at it from their side. I mean, they're up against the wall right now. And any kind of move higher in price will drive more and more people into the precious metals. I don't know how they're going to get out of this, but it's going to be expensive and it's going to be explosive.
And what do you think the straw is that breaks the camel's back? Is it just the lack of availability of physical silver?
Well, physical trumps everything. Once, Ted says that the biggest thing is that when if the large users of silver, whether they be Ford or Toyota or Apple or whoever uses this stuff by the hundreds of metric tons, the commercial traders are going to move heaven and earth to make sure they're supplied. But in the end, it's going to come down to a physical supply crunch. There's no question about it. And that's what's going to set the world on fire as far as the silver market is concerned.
And what could go wrong? What could have us sitting here in a year, 2, 3, 5 years' time with precious metals only either where they are now, slightly lower, or only slightly higher? What has to happen in order for this to continue?
And I'll tell you what, Dave, that's anything I would say answering that question would be wild-ass speculation. I'm just not going to go there because I just don't think it's possible. You take a look at other commodities out there, whether it be aluminum or natural gas or crude oil or stainless steel or rubber, or I don't care what the commodity is, they're all rising in price. And they've all set record highs on copper as well in the last, 2 weeks, 3 weeks, a month, or yesterday or whatever. All commodity prices are rising. And this money printing is finally, the central banks want inflation. They have an inflationary bias right now. And there's no way that precious metal prices are going to be where they are even a year from now, in my opinion. And they're desperately trying to get out of their short positions in the precious metals without blowing the rest of the commodities market sky high. But I don't think it's possible. And I pretty much guarantee you that the question you asked will be a moot point within a year.
Okay. Can you tell our community how they can learn a bit more about what it is that you do?
Oh, yeah. I write a daily column, precious metals column on the internet 5 days a week. So it's about 260 columns a year. It's Ed Steer Gold. I can't remember what my column is called. Just do it so automatic.
It's all right. Well,
it's edsteergoldsilver.com. And they can just Google it, and then it comes up, and there's a sample column tab there, and they can read what's in that. And if they're interested in what I have to say, they can sign up. And the freight is $100 US per year for about 260 issues.
Perfect. What I'll do is I'm going to put a link to that in the description and show notes of this video. So anybody that's interested in hearing more about what it is that Ed does, click on that, and you'll get to his website and can learn more about it there. But for now, Ed Steer, thanks for joining us on GoldCore TV.
And thanks for having me on, Dave. I appreciate it.
Thanks for watching. And if you enjoyed this video, you'll definitely enjoy these interviews with some of the leading voices in financial markets and trading. And remember, as always, if you want to see more interviews with thought leaders and industry experts in financial markets, subscribe to GoldCore TV and hit the notification bell now. And if you want to learn more about how to buy, sell, and store physical gold and silver, log on to goldcore.com. Your precious metals experts.